appears to have capped gold's gains. In this report, we aim to shed light on the catalyst driving gold's price and assess its future outlook. Market participants appear to be eagerly awaiting the Fed's interest rate decision, which is due to be released tomorrow. Following last week's initial jobless claims figure, which indicated that the US labor market remains tight, following a lower than expected figure of 228K compared to the predicted figure of 242K. The lower than expected figure may have potentially provided some leeway for the Fed should they decide to increase interest rates in their meeting tomorrow, given that the tight labor market could add to inflationary pressures. Furthermore, the better than expected S&P preliminary manufacturing figure for July was indicative of the manufacturing sector contracting, but at a slower rate, in addition to Fed's fund futures implying a 97.2% for the Fed to hike by 25 basis points appears to be supporting the dollar. The positive financial releases could be weighing on gold's price, given that the two maintain an inverse relationship, and thus the greenback's rise could be attributed to gold's move to lower ground. However, the current economic situation in the US could weaken the greenback, as despite some positive financial releases, the long-term macroeconomic outlook could be perceived as a negative for the US economy. Therefore, we may see the precious metal moving in an upwards direction in the long run. Newcrest on Tuesday released its Q4 fiscal year 2023 report, which confirmed that the company had achieved its fiscal year 2023 gold production. The company was able to alleviate production snags at its flagship Cadia mine in New South Wales, allowing for the mining facility to reach prior production levels, as the mine was able to increase production by nearly 14%. In the event that production keeps increasing, we may see an increase in the supply of gold into the market, which could theoretically drive the precious metals price downwards. Furthermore, should that be the case, we may see the price of gold declining. Yet, given geopolitical events such as the gradual de-dollarization, we might see potential increases in supply being snatched up by governments in an attempt to reduce the reliance on the dollar. Furthermore, we should note that Newcrest is about to be acquired by Newmont, with the deal pending shareholder approval, thus potentially benefiting Newmont as well. According to data from gold.org, North America in the week ending 21st of July has switched its gold ETF flows from negative to positive. Since the 26th of May, gold demand in North America has been gradually declining, yet last week that changed. North American gold ETFs demanded approximately 4.9 tons of gold, ending an almost 1 month recorded decline in demand. It could be chalked up to increasing fears of a recession in the US, UK, and China, as the rhetoric surrounding the potential recession appears to be ramping up from traditional news outlets. Therefore, giving gold status as a hedge during times of uncertainty, we may see this renewed interest in the precious providing support for gold's price in the short term.